How do you pay for your kids' college, or how do you at least help them out? Today we'll tackle that question along with the earnings from Target and TJ Maxx. And I'll give you a hint, it isn't spending all your money at Target and TJ Maxx. You want to help your kids out, right? But as it gets started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. All information or more disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So Corey, I'm going to start off real quick. How did you pay for college?
Oh, Mike, I just made a presentation about this for Steve to present this week for the tuition planning class. So everybody will have to tune into that. But I learned 22% of families pay just out of pocket. And that's what my family did as well. So using your current income. So you just,
wow, that's impressive.
So no 529s, none of that. You just straight out of pocket.
Yeah, so I can say for me, I joined the military, and that paid my undergrad. So, and then other degrees, other employers paid. So I like that method too.
That strategy might be in the presentation as well.
Yep, 529Bs are what I'm going to talk about today. And then, of course, we could talk about college loans, but that is a painful topic, especially with these interest rates. So I saw this article, Trump's new tax law expands the 529. And when I said, I got to read this. But here's the thing I found. Only 10% of parents use a 529. So just when you expand something that only 10% of parents use, it's probably not that expensive to expand it. But what a 529 allows a parent to do is to put a set amount of money in each year. There's a certain cap, and that money grows. As far as dividends or capital appreciation, it grows. And if you take the money out to use for college or tuition or things related to college, you don't have to pay on the gains. So it's almost like you avoid paying taxes on the gains of those dollars. And then there's certain states where actually when you put money into a 529, you can write that amount off your state taxes. And it varies by state. I know Ohio's one that does allow you to write that off. Now, what was the change that Trump or this new one put in? It allows it to be used for more than just college. It also can be used in, and I thought this is a really important one, vocational programs, welding, HVAC, cosmetology, tuition books and fees for licensing, and some continued education. So that's kind of the expansion. 529s can also be used for private school tuition, K through 12. So anyways, great way if you have the income to put away for this and you want to invest it. The disadvantage of a 529, some of the ones that you select for your specific state, you may only get a few choices. Like you're not allowed to just invest all over the stock market. They have certain mutual funds or certain things that you can invest in. So anyway, that's a 529. Anything you want to add to that, Corey?
Yeah, tune in this week for Steve's presentation because you're going to learn more about 529s and you're going to learn more about, you're going to learn something new. How about that? You'll learn something new. That's right. Got to tease it.
And you could also do them for grandkids too. And as far as the caps, it's for each kid. So a person like me has like 5. Just so you know, you can put in for each kid and then you can shift. So like what if I put in for little Johnny and Johnny doesn't go to college, but little Mary does, you can shift the dollars over to a different kid. So it's not like you better go to college and use that money. You'll find a way to get it. So I'll let you take it over. Take it over to Target and TJ Maxx.
Yeah, this week is all things retail, all things consumer. So here we go. We'll zoom in a bit here on Target. This is just kind of their earnings report.
I love
Revenue
it.
for the
I love it. Zoom in on Target. That's
Let's
amazing.
zoom in. Revenue was just flat, year over year, which if you think about it, flat isn't really flat. If a company has flat revenue because of inflation, right? Because of store growth. So in theory, like there should be no such thing as flat for a retailer who's growing their store count and increasing costs with the price of inflation. But nonetheless, that's where Target was. Now this is not good. So digital sales only grew 4%. Amazon and Walmart are destroying everyone in these categories. So Target clearly doesn't have the loyal base that allows them to compete there. And can that change? Of course, but it's not looking good. I wanted to mention a couple things, Mike. I did listen to the conference call this morning. Here's what they said about the consumer, because again, we don't care so much about Target. It's more about the consumer. They say value is top of mind for consumers right now, which this reminds me, part of this, sometimes you hear these things from these companies and frankly, they're excuses. Now, easy for me to say, I'm not running the chain or anything, but sometimes they just are excuses. But it did remind me, Kava and Chipotle and Sweetgreen had really big problems with their comp store sales growth. So sales growth, by location, versus McDonald's. McDonald's had very nice comp store sales growth. So is the consumer seeking value? I mean, maybe we have some other data points that do indicate that. In the case of Target, though, this is not about the consumer. This is about where they are competitively versus Walmart, Amazon, and they are not in a good position. But they do mention, I got the sense that they view the consumer, Target's management team, as just hanging on after these kind of years of inflation that we've seen. That's their view of the consumer, just barely hanging on. Again, their view is probably biased because of their weak results. They did announce a CEO change. They promoted within. I think that's something that they've done quite a lot of in their history, which in some sense, like from the cultural standpoint, okay. But I don't think that's what the market wanted. So the stock is down, 8% today. And, basically, I mean, I don't know, for all-time lows. It's obviously not all-time lows, but for all intents and purposes, it's not good.
No.
I mean, it's a company, they do $25 billion of revenue a quarter, and their market cap is barely $40 billion. So, I mean, they're not turning anything into market cap at this point. All right, TJ Maxx. Well, TJ Maxx, amazing report. Comp store sales were up nicely. Revenue in general was very okay. I wanted to show this. Look at these net sales. You have Marmaxx in the U.S. up 5%, Home Goods in the U.S. up 5%. That's at one of their stores. TJ Maxx Canada up double digits, and TJ Maxx International, Europe and Australia, up 13%. And now some of this was currency, affected by currencies. TJ Maxx, Mike, their earnings call hasn't started yet, so I can't say it's in like 30 minutes or something. It's this morning. I mean, this is all new stuff, right?
You're getting excited about this.
No, I'm not going to listen to this one. But
okay.
But they, in their comments, right? They had put these company comments. They don't even mention the consumer. I mean, or as far as the health of the consumer. They're not even concerned. And this is what you see with companies who are executing well. They don't even mention, weak consumer, strong consumer, value consumer. No. That's just business as usual. There are no excuses, right? At a place like TJ Maxx this quarter. They're executing very well. Mike, I don't know if you've ever studied TJ Maxx fundamentally, but they run a clean operation.
I can't say I have. I'm sure that I've dropped off people to TJ Maxx. I'm not sure if I've ever set foot in the store. Sadly, I know exactly where it's at though.
Well, it looks like it might be all-time highs today. So new
Ours is
all-time highs.
ours is really close to target, so they probably should look for getting a bigger lease.
Yeah, they might be expanding for sure. So all-time highs today. The company, doing very well, executing. Anyway, that's what we got. So it seems like Target might be making excuses for the consumer.
Yeah, it seems like a standard thing. I always heard this joke. A CEO comes in and he finds 3 envelopes and it says, when you have problems, open up one of these envelopes. And so the first problem happens, company earnings are down. It's like reorganize everything, and goes good for a year or two. And then the next, starts to have problems again. It opens a second envelope and it says redo the product line. So he does that. And then starts having problems again. And then finally he was like, oh, time to open the last envelope. These other ones helped. And it says, write out 3 envelopes to the next CEO. That's
funny.
like what Target's at is, we got a new CEO, better open those envelopes. I think Target's not doing well, like you said, compared to the duopoly of Amazon and Walmart that seemed like
Costco. Amazon, Walmart, Costco. The Target's just, where do they fit? They don't. I mean, not right now.
They're leaning towards where Kmart fits.
Yeah.
Which brings in another one interesting, really, is Kohl's, but we won't talk about that one today. I'm sure
Kohl's, I would say, doesn't have quite they don't have as appealing of locations. I think Target on a location basis is probably a better position, but again, I mean, where do they fit? I mean, they're not competing.
Kohl's fits for me. I've actually been in Kohl's because I return Amazon goods there.
There you go. All roads lead to Amazon.
That's right. Thanks, everyone. Have a good one. Bye.